Raj and Jay, hope you now have working knowledge of banking system in India.
Yes, Mr. Kumar. Thanks for sharing the information.
Mr. Kumar, is it necessary to be a customer of any bank to avail the services of the bank?
Yes, Jay, you are right. One should have an account with a bank to avail the services of the bank.
So, how can one become a customer of a bank? Will you please let us know?
Sure, Raj. In this session, we will learn about accounts and deposits. We will learn about the procedure of opening an account, various types of deposits, and operations in deposit accounts. After completing this module, you will be able to explain deposit accounts, list the required documents to open a deposit account, identify various types of deposits, explain the operations in deposit accounts. A person desirous of opening a deposit account in a bank has to fill up and sign the prescribed account opening application form and furnish the below introductory reference of an acceptable person, acceptable proof of his or her identity, proof of residential address, photographs, initial deposit. Click each item to learn more about it. You must have heard about Know Your Customer or KYC procedure. In 2002, RBI had issued directive to all banks for complying with the procedure of Know Your Customer in respect of all of their new and existing domestic and non-resident customers. KYC establishes the identity and residential address of the customers by specified documentary evidences. The KYC guidelines issued by RBI reinforce the existing customer identification practice of banks. KYC guidelines have to be compulsory adhered by banks in regard to all of their customers who maintain domestic or non-resident rupee or foreign currency accounts with them. Accounts opened by individuals, group of individuals, companies, firms, religious trust accounts and non-religious trust accounts should be subjected to KYC procedure. In order to prevent identity theft, identity fraud, money laundering, and terrorist financing, the RBI had directed all banks and financial institutions to put in place a policy framework to know their customers before opening any account. Proof of identity, Aadhaar card. Proof of address, Aadhaar card. Specimen signature of the customer is obtained on the account opening form in the presence of the bank staff and is attested by an authorized bank officer in the form itself. A customer is recognized mainly by his or her signature on the checks, vouchers, and these are compared with the specimen signature on record to verify the genuineness of the customer's signature. In the case of illiterate customers, banks take the thumb impression for identification purposes.
Mr. Kumar, can a person operate his or her account through another person?
Yes. At times, a customer would like to transact his or her business through another person. Banks accept this arrangement for which a power of attorney or POA is essential. Power of attorney is a document duly stamped as per the Indian Stamp Act given by a customer to his or her banker, authorizing his or her attorney to operate the account.
Mr. Kumar, who all can open an account with a bank? Can more than one people jointly have an account?
Let me tell you. Banks offer individual accounts and joint accounts. Banks also offer accounts for illiterate persons. Click each customer type to learn more about it. Read the question and answer. Click on the right option and click Done to complete answering the question. A deposit account can be closed in below 3 cases. At customer's request, a customer is entitled to terminate the relationship with a bank by applying for closing the deposit account if he or she is not satisfied with the services of the bank or for any other reason, such as transfer or relocating to another place. Closure by bank. A bank may close account or stop operation on a customer's deposit account in any of the following cases by giving reasonable notice to the customer wherever necessary. On receipt of notice of death of the customer. A joint account may also be closed on the death of any one of the account holders and fresh account opened in the names of the surviving account holders. Stopping of operations. A bank stop operations in an account in case the bank receives an order by a court or by an income tax authority until the order is lifted. Deposits are broadly classified into 3 categories: demand deposits, term deposits, and hybrid or flexi deposits. Demand deposits are deposits that are repayable on demand by the customers. There are 3 types of demand deposits: current account deposits, saving account deposits, and call deposits. Term deposits are deposits that are repayable on maturity dates as agreed between the customers and the banker. These deposits comprise of fixed deposits and recurring deposits. Hybrid or flexi deposits combine the features of demand and term deposits. These deposits have been introduced in recent times by some banks to meet customers' financial needs and convenience and are known by different names in different banks. Current accounts can be opened by individuals, business entities such as firms and companies, institutions, government bodies, societies, liquidators, receivers, and trusts. Listed below are the main features of current accounts. There are no restrictions on the number and amount of withdrawals and deposits. Checkbook facility is provided to each current account holder. Withdrawals are permitted by checks. Balances in the current accounts do not earn any interest. Customers are allowed overdraft facility. Overdraft is a facility whereby banks honor checks drawn by current account customers even when the balance in the account is less than the amount of the checks. the account holder gets periodical statements of accounts from the bank giving the details of transactions for customers' verification and record. Savings bank accounts are opened to keep savings of individuals and small businesses. Banks pay interest on these accounts. Currently, RBI regulates the rate of interest on savings accounts. Savings accounts can be opened by individuals, guardians, on behalf of their minor children, wards, clubs, associations, trusts, and small businesses. The savings bank accounts are of two types. Accounts with checkbook facility, in which the account holder can withdraw amount by checks drawn in favor of self or pay to other parties. Second is accounts without checkbook facility, in which the account holder can withdraw amount from his or her account only at the drawee bank branch by filling up a withdrawal form. Listed below are the main features of savings accounts. Withdrawals are permitted on demand of the account holder by presentment of checks or withdrawal form or letter. No overdraft, payment in excess of credit balance is allowed. Savings bank accounts offer a passbook wherein date-wise debit or credit transactions and credit balances are shown as per the customer's ledger account maintained by the bank. Term deposits are of three types as displayed on the screen. Click each type to view its description and features. Fixed deposits are repayable on the fixed maturity date along with the principal and agreed interest rate for the period. The main features of fixed deposits are: fixed deposits are accepted for. The main features of recurring deposits are: the customer deposits a certain amount as per prefixed. Frequency generally monthly or quarterly for a specified period. The interest rate payable on recurring deposits. These deposits are a combination of demand and fixed deposits for meeting customers' financial needs in a flexible manner. The main features of the hybrid or flexi deposits are: only one savings or current account is opened and the term deposits issued under the scheme are linked to the account. It offers the advantage of convenience. The customer opens only one account, savings or current, and need not come to the bank branch each time for opening or premature breaking the term deposit. It offers advantage of higher interest earning. The customer earns higher interest on his surplus funds than is possible when he opens two separate accounts, savings and term deposits. Read the question and answer. Click on the right option and click Done to complete answering the question. We know that savings and current account holders are issued checkbooks. Can you please tell me more about checks? Sure. As per the definition, a check is a bill of exchange drawn on a specified banker and not expressed to be payable otherwise than on demand. This means that a check is an instrument that is exclusive to the banking system and no other institution is empowered to operate a checkbook system. A checkbook contains a number of checks. A check has three parties: the drawer, drawee, and the payee. The drawer is the account holder who signs the check. Drawee is always the bank branch where the account holder maintains his account, and the payee is the beneficiary who will receive the amount mentioned in the check. Let's see other features of a check. A check should be in writing. Writing can be in ink pen or ballpoint pen, or typed but not in pencil. A check can be written by another person and not necessarily by the drawer only. The check has to be signed in ink by the account holder as per the specimen signature on record with the bank branch. A check has to be presented for payment must have a date on it. A post-dated check cannot be paid before its due date. Also, a check may be paid only within the 3 months of time from the date mentioned in the check. A check to be presented for payment must also mention amount to be paid or the check amount. In the printed check forms of all banks, there are 2 spaces for writing the check amount, in figure and also in words. We see some checks are crossed on its top left corner. Crossing a check ensures that the check will not be payable in cash, but through the bank by credit to the account of the payee. Let's look at the crossing here. Crossing by the 2 parallel transverse lines simply, either with or without the words not negotiable or and company or account payee. These are examples of general crossing, and in such cases the drawee banker shall not pay it otherwise than to a banker. A special crossing consists of an addition of the name of a banker across the face of a check with or without 2 parallel transverse lines. The special crossing ensures that the drawee bank shall not pay the check otherwise than to the banker to whom it is crossed. A check can be made payable to the bearer or to the order of the payee. Bearer checks can be encashed by the payee or the bearer of the checks. An order check has to be paid to the specified payee or his or her endorsee. A check payable to order can be negotiated only by endorsement and delivery. Endorsement is made on the back of the check or by attaching a slip of paper to the check. Following are the main requirements of endorsement. Signature of the endorser without adding any words is adequate to constitute endorsement. Endorsement has to be made by the payee or by all the payees jointly. An endorsement cannot be partial as to only a part of the amount of the instrument. Now, let's see some do's and don'ts when using checks. Do make sure your account has sufficient funds before issuing a check. Do write clearly and always use permanent ink pens such as a ball pen. Do make sure there are no amendments on the face of the check as banks will reject them. Do always end with a word only after writing the amount payable on the check. Do ensure that no check is removed without your knowledge and spoiled checks are completely disposed of. Do keep your checks in a safe place and never leave signed or unsigned checks unguarded. Do regularly take stock of unused checks and conduct reconciliation of checks paid with your bank statement. Do immediately report your case to your bank if there are missing checks in your checkbook. Don't sign any blank check or issue a blank check as payment. Don't fold, pin or staple written checks. Don't use laser printer, felt tip pen, erasable pen or pencil or other printing techniques that can be easily erased and written over to write your check details. Don't write below the MICR, magnetic ink character recognition field of the check. This will affect clearing of your check if you do so. Let's summarize what we have discussed in this module. KYC establishes the identity and residential address of the customers by specified documentary evidences. Specimen signature of the customer is obtained on the account opening form in the presence of the bank staff and is attested by an authorized bank officer in the form itself. An individual who is above 18 years of age, being of sound mind, can open a deposit account with a bank. More than one individuals come together and open a bank account. These are called joint accounts. Illiterate persons who cannot sign are allowed to open savings account without check facility or fixed deposit account. Deposits are broadly classified into three categories: demand deposits, term deposits, and hybrid or flexi deposits. A deposit account can be closed in below three cases. At customer's request, a customer is entitled to terminate the relationship with a bank by applying for closing the deposit account if he or she is not satisfied with the services of the bank or for any other reason such as transfer or relocating to another place. Closure by bank. A bank may close account or stop operation on a customer's deposit account in any of the following cases by giving reasonable notice to the customer wherever necessary. On receipt of notice of death of the customer. A joint account may also be closed on the death of any one of the account holders and fresh account opened in the names of the surviving account holders. Stopping of operations. A bank stop operations in an account in case the bank receives an order by a court or by an income tax authority until the order is lifted in writing by the court or income tax department as per the case. Deposits are broadly classified into three categories. Demand deposits, term deposits, and hybrid or flexi deposits. Demand deposits are deposits that are repayable on demand by the customers. There are three types of demand deposits: current account deposits, saving account deposits, and call deposits. Let's summarize what we have discussed in this module. KYC establishes the identity and residential address of the customer